terms, meaning the length of time that the loan will be good for, the interest rate, and the loan to value. Hey, it's Steven, Gulf Coast Multifamily. Another video about the process of buying and selling, this time talking about due diligence, and I did a video about the physical inspection portion, but this is going to be more about the financing. So if you've been doing this for a little while, you probably have a good handful of people you reach out to when you're even just looking at a property to get what's called a soft quote or an idea from a lender what they're going to lend at. But if you're newer to this process, you might have to try to figure that out really once you've gotten a property under contract or you're very close to that point. So when you just get started, make sure it's okay with the seller, but you'll have to share some financial information from the property and from yourself with a handful of different either mortgage brokers or banks that you plan to deal with. And usually you want to get at least a soft quote or an idea from the bank what they'll be able to lend at. And hopefully you're doing that concurrently with the physical inspection, so you at least have an idea like, okay, we are probably moving forward before that appraisal actually gets ordered by the bank, because that's going to be one of your larger expenses of the due diligence period. But hopefully within the first week or so of being under contract, you've got that appraisal ordered, you've got that bank chosen. So a handful of different things you'll look for when you're going to a bank are the terms, meaning the length of time that the loan will be good for, the interest rate, and the loan to value. So all of those things together is going to come up with what your payment is and how you're going to be able to cash flow that property. Something to keep in mind, especially during these times that we have right now, is when your interest rate is going to be over with. So if you have a 5-year term, 5 years probably gives us enough time to not likely be in a volatile situation with the current interest rate market, because it's 5 years from now. Now, some banks are going to do something called bridge debt, which means you could potentially have 12 to 24 months to refinance that loan, which could put you in a little bit harder of a spot to do. So I always try to recommend, at least worst case, being able to stay in that first loan product for up to 5 years. So there's obviously a lot more to it when it comes to financing. If you've got any questions about that, or if you're under contract and looking for something, I'd love to hear from you. Hope you have a great rest of your day, and talk soon.